Let's get across the market open with David Lane from Ord Minnett. David, some important data coming out today. What can we expect?
Yes, you're right. It's probably the first piece of important data that we'll see in Australia this year, with the CPI number coming out and also some jobs data coming out. So, yeah, a lot of market analysts and economists will be looking closely at that data to see whether or not there's a chance of a rate cut in February when the Reserve Bank meets on the 18th of Feb. I think it's probably unlikely that will happen, and the November CPI number that we're expecting today is probably likely to be a little bit higher, and indicate that we've still got inflation as a fairly sticky thing, and that the jobs market is very robust. So I think those that are betting on a February rate cut will probably be disappointed today.
So how important is this figure when the RBA do meet, and what else will they be considering?
Yeah, it's important, but not overly important in that it's a monthly figure. So it's the CPI from November. Closer to that February meeting, they will get some more data coming through. And I think what the RBA is looking at is the longer term trends. And from the last couple of meetings, I think it's fairly plain that we still have a very robust employment market. We do have inflation, hanging around fairly stickily. So it's probably unlikely that we get that February rate cut. And then as we head through later in the year, we've got an election cycle about to start. So the election around May, it'll be interesting to see whether or not we actually get a rate cut before that election.
And today's CPI figure is likely to be impacted by the weaker currency, which feeds into higher fuel costs. Why could this be exacerbated over the coming weeks?
Yes, well, you're right that the weak Australian dollar basically means that we're importing inflation, and we have seen overnight that the oil price rallied. The Northern Hemisphere is in a very big cold snap at the moment. So quite often we do tend to find that the oil price has a seasonal rally with the Northern Hemisphere winter, and it's probably likely that will feed into further fuel costs. And as you mentioned, the weak Australian dollar, the dollar was down again last night. So that feeds into further inflationary pressure from imports that we have.
Now, outside of the noise of inflation and interest rates, you have been reviewing market valuations.
Yes, 2024 was obviously a very good market or good year for markets. The Australian market did okay. We were up about 11.4% on an accumulation basis, but underperformed many of the other markets around the world. Obviously, we know that the US performed very, very well, but also markets like Taiwan and Singapore performed very strongly as well. When we look at the US and the Australian markets, they're both fairly stretched as far as valuations are concerned, and probably for different reasons. The US, obviously, we've seen that AI theme and the growth that's been coming through there, and the US has got fairly strong GDP growth, and their earnings growth has been fairly good. In Australia, our earnings growth has been okay, but we've really got that productivity problem, and so we're not seeing as much earnings growth as in the US. But when we look at both markets, both are fairly fully stretched as far as the overall market valuations are concerned.
And you say the benefits of global diversification proved correct last year.
Yeah, absolutely. Yes. As I mentioned, the Australian market did okay, but many of the other markets around the world did better. So having a global portfolio and exposure to a number of those markets was a positive in 2024. It's likely to also be a positive in 2025 as well, because as I mentioned, we've got that productivity issue here in Australia. Some of our blue chips are at relatively high levels. We do see some value in small caps. But yeah, I think 2025 will probably be a year where having global diversification will be a positive, and potentially looking at downweighting some of the exposure to the US, taking some profits off the table after the strong year that they've had, and looking at some other markets, particularly as far as the emerging markets are concerned, countries like India, Indonesia, Japan are still growing fairly strongly and provide some further diversification.
And David, we got some data overnight out of the US that showed a resilient US economy, and the Fed may in fact change their path of interest rate cuts because of that.
Yeah, well, certainly the bond market is now indicating that the likelihood of further rate cuts in the short term in the US is unlikely. And yes, as you said, that data that we saw in the US means that it is a very robust economy. Inflation there is still relatively high and not necessarily coming down either. And as we head towards President Trump, some of the policies that he's going to be putting in place as far as immigration are concerned, as far as tariffs are concerned, could well be inflationary as well. So yes, we did see the equity market come off last night, and the bond market rally as those discussions about an interest rate cut are put further down the path in 2025.
And there will be a focus on some data coming out of the US on Friday as well. Why is that important?
Yeah, well, the US market focused very much on that jobs data. We do actually have a little bit of a strange week in the US because there's a public holiday on Thursday to recognise Jimmy Carter and have a Memorial Day for him. So we'll have markets closed on Thursday, and then that economic data coming through on Friday. So it will be a fairly important barometer as far as the US economy looking forward is. But we could well see a little bit of a quieter week, given that there's that public holiday on Thursday.
And David, just quickly, I see President-elect Donald Trump has announced a $20 billion US dollar foreign investment to build new data centers in the US. Do you expect that to impact markets?
I don't necessarily think it will impact markets in the short term. I think it does play into that long-term theme, though, that artificial intelligence and data is extremely important. In 2024, we saw a listing of Digico here in Australia, which is a large data center, and also the sale of AirTrunk earlier in the year. So there has been a lot of activity in that space, and it is definitely a space that there is a lot of investment going into, and it will continue to be a growing sector and of growing importance to the economy. And I think that's what we'll have to take into account across 2025, is not necessarily jumping at shadows when President Trump puts out a tweet or a truth. We'll have to actually look to see how that's implemented and the longer term ramifications rather than just those short term reactions.